Hey everyone, welcome to this week's episode of Commission Breath. Brandon Love here with Tom Moffat, and today we're going to dive into the one activity you can do that's going to dramatically impact your business. So, Tom, let's kick it off.
Yeah, absolutely. And this one activity, you can really encompass several different line items in the one activity. And this activity is tracking metrics. So we're going to talk about the different metrics that Brandon and I focus on primarily. And we're going to break it down with each one and also talk about how you can track it and what the nitty gritty details are for each one, like how much time it takes to do it, where you should track it, how diligent you should track it. So why don't we start off with the first one? Let's dive right into the first one with leads. So tracking leads is of course like one of the most important things you can do. My first year, I definitely wasn't really tracking leads per se. Like I was writing them down so I can like remember who to reach out to, but I wasn't tracking it from a metric perspective. I wasn't going back year over year analyzing, okay, what's my conversion ratio? But now we have a pretty smooth process in doing that with our spreadsheet and everything we have going on in the back end. So, Brandon, why don't you talk about how you track your conversions? Because I think both of us are the same, but there might be some nuances there.
Yeah, so every year I just start a fresh Google Sheet and it has like the name of the client, the date of the referral, who they were referred by, and then I track within that if they've canceled, if they've converted, et cetera, et cetera. So I can see monthly, okay, January this year is in line with what January was last year, or it's not in line and it points to something that might not be healthy in my business. So that's why I like it like that. It's very simple. I think the key piece with tracking leads is you need to keep it simple so that you can action the steps. Like if you're building out all these complex ways of tracking it, but you never actually do the simple follow up, then it's of no value to you.
Yeah, and you break it down month to month, which I like. I haven't really set that up myself. I just go by the yearly conversion rate and I can kind of track how I'm doing based off of the floating number there. And we'll talk about more conversion on number two, but from a lead perspective, I also track these different sources of where they're coming from. And I think that's a really big crucial component because you need to see where you're getting your leads from. Like if you're for example, like really heavy on referral partners like realtors, cool. Do you maybe want to reduce that and get more of a percentage from your past clients? Or maybe you're okay with that and you realize, okay, realtors are working for me. Maybe I just put more gas on the fire and keep that going and ramp it up. That's been a big thing for me is reviewing where my leads came from last year. And they're starting to swing a little bit in favor of different avenues versus like I'd say maybe 90% 80% of realtors maybe a year or two back. So that's a really important one. I think you're the same too, Brandon. You track that as well.
Yeah, I track the source as well. I think the value there, it's kind of like investing. You want to have a diversified portfolio to a certain degree. So if like Canada as an economy is getting crushed or the US economy, all your investments aren't totally skewed. And the same thing with your mortgage portfolio. If realtors are suffering and realtor ends are down, that can hurt your whole book of business for a year. Whereas if you have some diversity in there with FAs or social leads, past clients, etc., you at least keep things afloat. Even if your primary driver is one lead source and that's all you focus on, great. But have those other ones that are kind of slowly cooking or stewing away so that they provide you some revenue there.
Yeah, and that's one of my favorite things to do at the end of the year is reviewing not only like the percentages, but the different types of lead sources and kind of reviewing, reflecting back to the year, like which type of lead did I enjoy most? Was it online leads, which it probably wasn't, or was it referral partners? Was it a specific referral partner? Was it social media leads? Like really reflect back. You don't have to wait till the end of the year to do this. You can do this now and really just go back and see, like, as an example, I really enjoyed working with leads from my financial advisor. Maybe I increase the percentage. I'm at maybe 20% overall from my leads for financial advisors versus the rest of my sources. Maybe my next year goal is to increase that to 40 or 50%. So I think that's a good component of it as well.
100%. Basically, you just want to be watching for it being too lopsided and even it out. So you're obviously always want your number of files and your volume to be growing. But if it's growing in a stressful way where you're adding maybe too many realtor partners and there's too many late night calls, weekend check-ins, that kind of stuff, you might say, okay, I'm going to add more FAs so I get a more stable type of growth in that because they work the regular Monday to Friday. They're not typically blowing you up with emergencies.
Yeah, and I'd be willing to bet. I mean, it depends on how you start your business, but if you're going the traditional referral partner route, I'd be willing to bet that people early on in their business are most likely going to have the majority of their files from their main source of lead gen when they first started. And past client percentages are going to increase as time goes on in their book. Like a 20-year vet is going to be like maybe 70, 80% past clients. So I think that's pretty cool. And you can kind of see that in our book of business. Like for my leads and closed files specifically, I think I'm at about 70% realtor biz, 20% past clients, and 10% social. And that social keeps ramping up a little bit. And mostly the past clients are increasing as well, which is pretty cool to see.
Yeah, I noticed that this year as well, where the amount of realtors I work with has dropped considerably. Past clients referring other people or
Yeah.
them coming up for renewal has been big. And then obviously social, YouTube, et cetera, is starting to drip in a few that way as well. It's a nice balance. I'm not working with the realtors who just send like every person with a name who's not vetted. The ones I'm working with have a higher quality of lead. And that's also helping my overall conversions as well.
Yeah. So speaking of conversions, I mean, we touched on it a little bit already, but let's dive a bit deeper on it. So the main conversion I like to track is leads to close deals. So the amount of leads you get in to the amount of mortgages you close. Now, I know there's different types of conversions along the way that you can track, like lead to app ratio or app to approved or approved to funded ratio. Like there's so many different ones. I like to keep it simple and just go with leads versus closed mortgages. And I don't really know what the going stat is or the average percentage is for conversions on that specific one, but I'd like to think I think between 20 to 30% is pretty decent. I know I'm trending towards this year probably between 20 to 30% myself. And, a lot of us are experiencing the banks undercutting us with rates. So I think like this year for mortgage brokers, you're going to experience a lower percentage overall. But maybe there's a way we can do a survey of like all the listeners to see what their conversions are because I'm curious.
Yeah, I would be curious to know that as well. Another conversion that like I'm not meticulous about tracking this, but I do like to do kind of like an annual review on it is the amount of leads that come from a specific partner versus that actual
Yeah.
conversion rate. So I have one partner where she sends me a bunch of leads and my conversion rate for her is closer to like 80%. And then I have another partner who last year sent a bunch of leads and none of them ever funded. They always walked. They always had like this last like kind of thing come up, something pop up, and I was just like, something's fishy going on here. So I ended up dropping her as a partner, and it freed up so much time. I'm not working on these files, and it hasn't impacted my overall volume at all because her leads never went anywhere.
Mhm. Yeah, that's a great point. I haven't really specifically tracked that. It's more so like in my head, I just kind of like I know who has the higher quality leads from my referral partners, but that's definitely a good one to put down and track as well. To that point, it's not just the type of lead that comes in that's going to dictate the conversion rate. So to give you an example, let's say you're someone that does online leads versus referral based business, your conversion is going to be lower, but that person might have a 200, 300 book of business because they're just crushing online leads and they're maybe a rate discount brokerage. Like it's a completely different model. So it's not to say that the higher the conversion, the more business you're going to do. They are two different stats. And even within the types of leads, realtors or referral partners, as an example, you're going to have some that are going to send you a higher conversion rate per lead versus others.
Yeah, exactly. And I think for us, our focus is more on overall building that lifestyle business. So we prefer to have higher quality leads and not a mass influx
Yeah.
of like different people who fill out a form online. Whatever your model is, just figure out the stat that reflects the health in your business. And then that's your benchmark. So maybe you do it for the second half of this year, multiply that by two. That's your benchmark going forward. And you can constantly check that and make sure you're in line. So you know, okay, do I have to do some more prospecting? Are my referral sources drying up? Have I maybe lost them to another broker or agent or bank? And do I need to get a few more referral sources on there? It just kind of gives you an overall health status.
Absolutely. And speaking of health, I mean, this has nothing to do with health, but this is me trying to do a segue here. Commissions. Let's get paid, right? You got to track the commissions. And we've touched on this in other episodes before, but let's dive a bit deeper on your process, Brandon, because you're the commissions guy. You like to track to make sure we get paid. You do a really good job in doing it. And I think this is an aspect a lot of brokers are missing in their business. And it doesn't take too long to actually go through and reconcile each pay stub that you get in from your brokerage.
Yeah, exactly. I found over 15K this year alone in missing commissions by doing this. So I think it's super important for people to do. And it's very simple. What I do is same spreadsheet that shows the deals that are in and what's funded. Once it's funded, it gets put to a to be paid column, and it tracks what I think we should be paid. So let's say it's 110 basis points plus a 20 basis point promo. I'll put that in a little note tab. And then when the payroll comes out, I reconcile that to make sure it's lined up. So in a lot of cases, we were getting 50 basis on things and then like a later 25 basis point bonus, and I noticed that that bonus wasn't being paid out. And so I was able to flag that and get that paid for Tom and myself, but I was also able to draw the attention to that for four other agents on the team who then also got this money. So
That's
if
right. I
it
remember.
wasn't pointed out, then that money would be gone, right? And you can't go back years later and say, hey, you didn't pay me on this. It has to be timely for these requests. So I just reconcile it each time we get paid. If there's an issue, I immediately flag it so that the lender, the BDM or BRM knows, and they can handle it on their side.
Have you ever tried any system through CRMs that automatically track what you're supposed to be paid?
So I dislike automation for a lot of that stuff because I feel like you set it and you forget it, which is a blessing for automation, but it's also a curse because you miss seeing some of the nuance of actually going through and saying, okay, well,
Yeah.
this was supposed to be 50, but instead it's 37. Why is that? Or the bonus wasn't paid on the full amount. Why is that? And automation would just plug that in. It wouldn't necessarily flag that. I'm sure there is ones that flag it, but I prefer to have this kind of hands-on approach because really at the end of the day, we need this money to grow our business, to feed our families, to build wealth. And that's why we do this. We don't do this for love. It's for money at the end of the day. And I think that if you can't spend 5 to 15 minutes reconciling a couple numbers, you know,
Oh, 100%. And that was kind of a trick question because I knew the answer to that. But I think CRMs are great for a lot of things. But when it comes to tracking your pay, I think just forget about it using a CRM. Do it yourself. Two good reasons, as an example, is like, let's say there's a volume bonus, like a 30-day volume bonus on top of your volume bonus, a special with the lender. Your CRM is not going to be able to track how much you're supposed to earn on that. And a second example is, let's say you're submitting to one of the big banks and you have a HELOC component with that. Say it's a 500K total limit, mortgage amount of 200K, but the HELOC is 300K. It's going to think that you're getting paid more. So those are two reasons right there. And I'm sure there's more that we can go over, but we'll leave it at that.
exactly. I just find like by the time you fuck around with all the little like tweaking and nuance on these CRMs, it's just faster and more efficient to just use the spreadsheet. And it's a lot cleaner when it comes time to do your taxes if your accountant has a question on a specific file. Also, with that spreadsheet that tracks our commission, I track our commission volume and then the number of files funded. And I think it's really hard to control file size. You can't do that. Someone's going to come with a $50,000 port and someone might come with
Yeah.
$1 million mortgage. It doesn't mean you've done any less work or that your prospecting machine's broken or anything like that. It's just, it's not a good indicator to just track overall commission and volume. Number of files is an easier metric that I find shows health in your business. So if you figure out, okay, on average, I do 9 files a month, and then this month I did three. Why is that? And go back 6 to 8 weeks, and what you were doing then will point towards why you don't have that business today. And make sure you course correct because a lot of the times you get stuck in underwriting, you get stuck on the roller coaster of production, and you're not doing things like prospecting, you're not doing things like follow up that you usually do. And that's why your conversion rate's suffering.
Yeah, that's a great point. I mean, we should have added that to one of the first points. Like, that's a great metric to track is files funded, and it's super easy. So you compare that, and then maybe you have your average mortgage size that is automatically calculated by the end of the year, which we have that as well. You can start to pivot. Like, if you're like, you know what, this is a beautiful part about our business is we're working completely remotely. So if you think your mortgage size is too small, why not try to take over a different city? Like, unless you're trying to really build out your brand in your small town, like, cool, that's a different model. But if you're just trying to make the most amount of money and run a smooth, easy, simple business, like, why not pivot to somewhere like the GTA or Vancouver or somewhere that has higher mortgages? And that's kind of like a side note to that. But I think tracking your average mortgage size will allow you to dictate where you should be pivoting in different markets.
For sure. And just exploring other opportunities as well. All of these data points and things you're tracking have to impact your efforts. If you're just tracking it for the sake of like just knowing it, it's a waste of time. But if you're taking it and you're saying, okay, this is going to inform where I invest my time, my resources, and my focus. That's really the point of it all. So you can kind of see these things, you can identify trends, and then you know when to course correct, when to pour more gas on the fire, etc. And that's what the data provides you.
Yeah. So why don't we hit this home with our last point? And I know a lot of listeners are probably thinking in their head, like, okay, where do I get all this done? We don't have anything for you. So that's not where we're going with this. So you have your options. You have your CRM options where you can kind of track some of this stuff, or you can just go old school with the spreadsheet. And that's the route we've gone. We've talked about this before where we've tried multiple CRMs and we use one CRM for specific things. But in terms of tracking our leads, tracking our closed mortgages, everything we talked about here today, that's all on a spreadsheet that we've curated over time. And it's easy because you can tweak it whenever you need to. We specifically use Google Sheets and I love it. I'm a huge fan of Google Sheets and you can literally do anything you want on there from a tracking perspective, tweaking anything. You can even add automations to spreadsheets if you really wanted to, which we don't, but you can go deep with it.
Yeah, and it's very easy to share with your team, with your accountant, with whoever needs it, versus like trying to explain to them how to navigate a CRM. It just adds a layer of complexity, which I think CRMs are great. I love it for like tracking renewals. I love it for
Yeah.
certain things that way. But by no means have I found one that does exactly what we need it to do. And the spreadsheet does that. And it's super simple. I can pull it up on my phone. I can pull it up anywhere and just update it. And it's very clean. And that ties into the other big thing that I track, and that is time. And tracking time was the game changer for my business. I'm sure a lot of you probably saw Jeff Mudrick's post on Facebook this week on ILMB group where he talked about how he had like 77 hours a week and then he dropped that down. And I think now he's at like closer to 25 hours a week. And I had a similar experience. My hours were crazy for the longest time. And then I started using Toggle to track everything I did. And I realized where I was wasting time, where I had inefficiencies, and I cut that down. And now I'm closer to 20 to 25 per week for the mortgage business. And then obviously we have the brokerage, which is a separate thing, but it's so much healthier to have that focus time. And it also puts restraints on your effort. So if I give you 3 hours to do a task, you'll probably take 3 hours to do that task. But if I say you have 1 hour to do this, you'll figure out a way to get it done in an hour. So that's what I do now is I put these forced time constraints on myself and I just bang out so much more work. That uncomfortable call, I'm not pushing it off. It's in that hour. I have to get it done.
Yeah, you'd be surprised how much time you're actually wasting during the day. And before I go there, quick side note, Jeff's coming on the podcast. We're recording next week, so we should have a pretty cool episode coming out in the coming weeks. But yeah, like when it comes to tracking time, I am not as diligent as you with Toggle, but one book we're both reading right now is Buy Back Your Time by Dan
Damn
Martell.
myself. Yeah.
Yeah, Dan Martell. And his stuff's really good. So this book is basically going over how to buy back your time through auditing the amount of time you're putting into your business, the stuff you're doing in it day to day, and also how to hire to remove yourself from some of the day-to-day tasks, which is right up our alley because we're searching for someone to hire in our business. And I've been auditing my time in a different way than you, Brandon. I'm more so trying to stack meetings right now to go back to back instead of having all of this dead space in my calendar. And I talked to you about this the other day. I'm also checking my email less because that was one thing I noticed. I started tracking what I was doing during the day. Man, I probably check my email like every 5 minutes, like as a habit on my phone. It's like one of the worst habits. I hate it. So I'm trying to limit that by checking it only 3 times a day, which has been very hard. But I think eventually I'll get there. And having that assistant is going to really help with that because she can monitor the inbox and flag me if there's anything urgent that I need to pop in and send off an email for.
For sure. I love Toggle because it shows us a breakdown of everything. So before this, I looked at my hours for last year and it was 1,479. And then I did my hourly conversion of that. So I knew that I made north of $200 an hour. And then it showed me a breakdown of all my tasks. So it was like 500 hours underwriting, X many hours client care, fulfillment, etc. And this year, like we have Diana in fulfillment, she's fantastic. So my fulfillment's dropped way down. Underwriting, I still have to do a decent amount of underwriting. That's part of the business. But like
Mhm.
I can also see, okay, my prospecting, like I spent 2 full weeks prospecting. Well, what would it look like in my business if I spent
Yeah.
like a full month and a half or 2 months of hours just prospecting? And I know that that would dramatically increase. So if I can say, okay, taking away email cuts away an hour a day for me. Well, that assistant, even if I pay them the full day, if I paid them $35 an hour, it's still worth it for me.
Yeah, and I would love to see what the hours were last year prospecting versus this year. And that's not just to you. Like we both know this. Both of us, our prospecting has dropped this year a decent amount. And that's just because of everything else we have going on. But it's great to track it through Toggle because you can see what's dropping. And like you said, like if you ramped up the prospecting, you could only imagine what the next year is going to look like. And that's something we're working on right now.
Exactly. And I think that's the key piece not to lose. I think in our business, we've made this mistake. I think everyone makes this mistake of getting busy in files, getting busy on like
Yeah.
other tasks. Like we're recording a podcast right now in the middle of the day. We could be prospecting, things like that, where it's like priorities have to shift, and having that time shows you a really defined number, and the numbers don't lie, especially in this industry.
Absolutely. So with that being said, we got to go prospecting right now, buddy. So we're going to sign off here. If you can, please subscribe if you're on YouTube or if you're listening on podcast, please give us that 5-star review. We would greatly appreciate it. See you next week.
Cheers.